Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning, every evening, and every weekend. No fluff, no vibes, just regime-aware intelligence built by machines and delivered by me. If you've got ideas on how to make this better, things that are working, things that are not, drop them in the comments. Constructive feedback is fuel for this experiment. As always, this is market intelligence, not financial advice. All right, let's get into it. Good morning. It is Friday, March 6th, 6:45 a.m. Eastern. S&P futures are trading at 68.05. We are sitting in a negative gamma regime with a VIX north of 25, creating a high-velocity environment where price is unanchored. Yesterday's energy-driven sell-off broke structure. Today's payrolls number decides if we break the floor. If 6,800 fails, the dealer chase lower begins. Let's look at the regime. We are operating in a negative gamma environment. Dealers are net short options. This is critical to understand. In this state, dealers are not dampeners, they are accelerants. They must sell into weakness and buy into strength to hedge their books. This amplifies volatility and removes the mean-reverting cushion we usually see. Volatility is free to expand. With the VIX at 25.22, we are pricing in significant stress. We are currently just 5 points above the put wall. The market is fragile, and the mechanics support momentum, not chopping range. Here are your critical pivots. The put wall is at 6,800. This is the line in the sand. A breach of this level forces dealers to short futures aggressively, potentially unlocking a slide toward the S2 level at 67.81. The upside resistance, the call wall, is all the way up at 7,000, leaving a massive vacuum overhead if a squeeze triggers. However, our immediate resistance is R1 at 6,900. The neutral zone is effectively non-existent. We are pinned against the downside rails. Watch 6,800 closely. It is the trapdoor. Before we get into the overnight drivers, let's take a quick moment to hear from today's sponsor. StockActTrades.com, because apparently we need a website to track what our elected officials are buying and selling in the stock market. StockActTrades is a free public transparency tool that tracks congressional stock trades in real time, the ones politicians are legally required to disclose under the Stock Act. You can browse every trade, filter by politician, and see exactly what sectors they're piling into right before, coincidentally, major legislation hits those same sectors. Every month, the site publishes detailed analysis reports, top traded stocks, and most active members. No paywall, no subscription, always free. So if you're curious what Nancy Pelosi was buying last quarter, or which senator just loaded up on defensive stocks 2 weeks before a defensive bill vote, Stock Act Trades has you covered. Because transparency isn't optional, it's just overlooked. Check it out at StockActTrades.com. All right, we're back. Overnight, the risk-off tone from yesterday intensified. First, geopolitical tension in the Middle East spiked again, with headlines regarding Iran-Gulf dynamics driving a bid into safe havens and pressuring futures lower. Second, we saw specific weakness in the tech sector pre-market, notably with Marvell technology dragging on the NASDAQ. This isn't just macro, it's sector-specific liquidation continuing from yesterday's energy shock. On the risk radar today, the calendar is maxed out at 5 out of 5. The main event is the 8:30 a.m. Eastern non-farm payrolls and unemployment rate. This is the binary event of the week. Here's the asymmetry. A hot print likely forces yields higher and pressures equity valuations, aligning with the negative gamma dealer flows to sell weakness. A soft print or a Goldilocks number could trigger a violent cover, forcing dealers to chase price upward into a thin liquidity vacuum. Do not front run this release. Later at 12 p.m., we have the Atlanta Fed GDP Now update, but the die will be cast by the morning jobs data. Strategic implications are clear. This is an expansion regime. Income strategies like iron condors are dangerous here. The probability of a touch on your short strikes is elevated. Selling premium in a negative gamma environment with a VIX at 25 is playing with fire. If you must trade, look for defined risk convexity, long puts, or debit spreads, but only after the 8:30 a.m. data settles the initial move. Cash is a valid position until the dealers show their hand. Bottom line, you're pinned against the 6,800 put wall with a negative gamma regime. In a negative gamma regime, the 8:30 a.m. print is the trigger. If support breaks, the dealer feedback loop favors acceleration to the downside. The data drops before the open. Let the market show its hand first. Level set, bias defined, good luck out there. Want to follow the experiment? Subscribe. Want the full dashboard? Go to gexlog.com. Standard disclaimer applies. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.